BCE Inc, BCE ticker, TSX. I think they're also on the New York Stock Exchange. We're going to do some Stan Weinstein once again. Stage analysis on the weekly chart. First and foremost, going to do my monthly chart trading framework to see where that higher prevailing trend, where it's going. Make sure we're in line with it. And so that is a nice duper top on the monthly that broke down back in January. Wicks, noise, false breakdowns, patterns within patterns. Wicks, false breakouts. And now this one closed below the breakdown line right here. So that was not a false signal. What happens after that? Implied measured move. Added to breakdown line. Here's a greedier of the targets. I'll explain why. Target reached a few months later. See, patterns. The further away the pattern, I could have also taken this height to bottom, added to breakdown line, added to this breakdown line right here, a little higher. Patterns within bigger patterns, support levels along the way. You have to consider them, they're there. It could slow you down. What's super good is when you break down below both of those and then close below, then you could get greedy maybe and take the greedier target. If you really want to get greedy, you could have taken this target here, added to the breakdown level, and that target did not get reached, guys. Barely. See how it happens? The closer you take your targets, let's do all of them. This greedy one right here, added to breakdown line. Scoot that. Okay. First target of that pattern, target reached easily the next month. Bigger pattern, top to bottom here, or even there. If you take the greedier from top here to the low here, added to the breakdown line right here, target reached a few months later, 1, 2, 3 months. And the greediest of targets, the highest of the highs with the low here, added to the breakdown line. Laser accuracy, really borderline. So that's the risk. Staying long might not get triggered. So what you want is you want to make sure that you get these closer targets, these closer patterns to the breakdown lines. They'll be shallower, less risk, less reward. So less good risk to reward ratio, but higher probabilities of reaching the target. So all these targets, essentially, they bring you down to this important support line. And that's the next step. The next step, if you could imagine it, would be the greediest of targets added to that breakdown line. Whoa! That is insane, guys. Insane. You have to go through this wall. Previous resistance turns support. So you have support here. You have support here. You have here, we had a base, so that was previous resistance turns support and brings you all the way down to this, the last of the support down here. But for that, you need to close below 53. Why am I doing the monthly? To see if we're in a downtrend, because we're going to do Stan Weinstein, and we are definitely in a downtrend below the 12-month moving average. It's angling downwards. You don't want to be playing upwards move when it's going downwards. That's a lot of weight, that monthly candle chart, that monthly candle moving average. Any pullbacks could be seen more as opportunities to short and continue downwards than actual reversals. For me to have a reversal on the monthly, I need here some sideways move, a break above 50, 55, 30, and starting to see the 30-week moving average starting to flatten out and go upwards, and have my candles here, and eventually a break here. then we could have some targets back to this previous this wall, previous support, turn resistance up to the 58. But until that happens, downtrend. Stan Weinstein on the weekly with all my super duper lines. Remove all. Clean that. Top, stage 4, stage 3, stage 4. And you see the red. I love this. Mansfield relative strength. It's more than just comparing to the SPX to know if you're underperforming it below the zero line. It actually highlights red if the price action is below the 30-week moving average and if the 30-week moving average is declining. So that's ultra red. All you have to do after that is add a few of those confirmations. Look on the monthly chart. Make sure you're below the Ichimoku cloud. Make sure, or Stan said, crescendo volume on breakdowns is very, very negative. So he loves that. And you see it right here on the initial breakdown. Heavy volume. And down, down. Oh, try to go back above. See, you could have if you just looked at the weekly, you could have said, hey, Pat, look, I had a breakout here. Well, there's a whole bunch of things that are wrong here. One, on the monthly candle chart, you didn't have the confirmation that it was a breakout. And you still have a declining 30-week moving average. So that's still dragging you down. See how it's dragging you down? You need a whole lot of price action above it or on the 30-week average to start making it flat and maybe hope to go back up, guys. So we're not there yet. Man, what is stage 4, guys? Since January, could have been shorting this. Telecommunication services is a sector. Integrated communication services. Okay, let's go look at the sector. Telecommunications. Ah, yeah, and I think that one doesn't exist anymore. Or they changed it. But either case, look at that. No, see, they changed it. That's why I don't have a lot of candles. But it's been it's been in a downtrend on the 12-month. A little erratic, but still in the downtrend. It's one of the few there that's in a downtrend on the monthly candle chart, guys. Trying to go up, but you see candle getting sucked back in. It's gonna need some more sideways move here before you get a strong breakout to the top. And what does it look like? Alastan on the weekly, underperforming the SPX, but starting to do a little better. Still underperforming, still declining 30-week moving average. The only thing you have now is you're above the 30-week moving average, but you're gonna need a whole bunch of price action here to make sure you don't keep getting dragged down. You want that 30 moving average to start flattening and then going up. And maybe here, when you're above the Ichimoku cloud, have a breakout candle with high volume. So even that sector is not doing super duper, guys. And let's even compare BCE. Let's compare that to its sector and see if it's underperforming its sector. So underperforming the SPX, and within its sector, you're underperforming the others. So there's other telecommunications stocks that are doing a lot better than BCE, so that's good. You're going down. You're not a leader, or you're a leader in the downwards move. So that's great, guys. Like anybody who's been here since January, awesome. Right now, if you want to get in, well, there's a big move coming up, guys, and you need that monthly close, like I said, below 53. I think it's a little higher, but below round number. If I have a close below low, where it open 52.84, yeah, 53 would be pretty good breakdown line. So wait for that, and you're gonna have that crazy measured move, the greedy one, or else whatever pattern you're gonna have. Like I said, the closer patterns. Let's remove that. Let me add whatever pattern you have here. The launching pattern, that could be your initial less greedy, more probable target of getting reached right here, like that. And that'll bring you down to 49.80. above the swell here, previous resistance now turns support, so that's great target. It should just slide down all the way to that if ever you have a break below 53 right there. And after that, you have that congestion here. Remember, these bigger targets, these bigger patterns, there's previous resistance and support along the way, and natural support along the way that slow you down. But right now, that first closest target is going to be easy breezy, guys. All right, that's it for me. BCE, stage 4 and down. Down.